Global markets are entering the North American session in cautious holding pattern, with U.S. equity futures modestly lower as investors continue to digest recent gains and await fresh catalysts from this week's key inflation data and Federal Reserve communication. The U.S. dollar is mixed across the majors, Treasury yields are a little changed, and broader FX markets remain largely range bound as traders resist taking on significant new positions ahead of Wednesday's FOMC minutes. And in Europe, the euro has found modest support after German industrial production unexpectedly rose by 0.9% in May, reinforcing tentative signs that manufacturing conditions may be stabilizing after a prolonged downturn. ECB policymaker Panetta maintained a balanced tone, warning that upside inflation risks from higher energy prices continue to coexist with downside risks to growth, underscoring the central bank's data dependent approach as markets continue to assess the scope for further policy tightening. The pound has been underpinned by another resilient domestic data release after Halifax house prices edged higher in June, suggesting the housing market continues to hold up despite elevated borrowing costs. Meanwhile, the yen remains under pressure, with dollar yen trading back towards recent multi-decade highs, as the absence of fresh intervention signals and persistent U.S.-Japan yield differentials continue to favor the dollar, although intervention concerns remain an important factor limiting upside momentum. In commodities and geopolitics, crude oil remains relatively stable as the geopolitical risk premium continues to fade, though reports of another damaged tanker near the Strait of Hormuz serve as a reminder that supply risks have not disappeared. Elsewhere, China's central bank extended its official gold buying for a 20th consecutive month, reinforcing the broader trend of reserve diversification by global central banks and providing an underlying source of support for precious metals. Looking ahead, attention now shifts firmly to North America, where traders digest the latest softer US ADP employment for fresh insight into labor market momentum, while any headlines around Federal Reserve policy expectations, global trade, or Middle East developments also have the potential to influence sentiment. With the market still awaiting this week's larger catalyst in the form of Wednesday's FOMC minutes, investors are likely to remain reluctant to chase directional moves until greater clarity emerges on the outlook for U.S. monetary policy. That's all for now.